In this video, traders are going to have 4 spread betting strategies. Stick around. Hey guys, a very warm welcome to you. Alright, so I have 4 spread betting strategies for you. There are lots of them out there. These are the 4 kind of broad ones that traders will use to spread bet. Some of these have served me well for over 15 years. And I know that a lot of traders use these and have used these for a lot longer than that. So without further ado, let's dive into. By the way, if you like this kind of stuff and you are getting into spread betting, you like spread betting, you like all things trading, please consider subscribing because you're going to love some of the videos we've got coming up for you. And also have a look through. We've got a massive library of videos. I'm sure you'll find something that really resonates with you and hopefully gives you a little bit more information and help with your trading. That's what we're all about on this channel. Okay, let's get going. So the first one, you may have heard of it, is trend trading. So what does trend trading mean? So a trend is basically something that's continuing in one direction. In the case of a market, an uptrend would be a market that just keeps going higher and higher and higher and higher for a long period of time. So if we are spread betting, the idea is we identify the trend and then we want to jump on the trend. Now, the beauty, of course, of spread betting is we can bet on an up market and we can bet on a down market. So we can bet on a downtrend and profit from a fall in price, and we can bet on an uptrend and profit from a rise in price. Buying is called going long, selling is called going short. So what we want to do here is, let's say we identified an uptrend, the market pulls back, we kind of see that it's stalling out a little bit after that pullback for whatever reason. And by the way, loads of videos we talk about some of the strategies and intricacies when we're looking at trying to how to identify these in other videos. But for this video, pulling back, we're looking to buy for continuation of the trend. So we're buying at this level and then we're hoping that this carries on and moves on for the next several hours, weeks, days, months, however long we're holding the trade for. So that's trend trading. Of course, we can do an uptrend or downtrend. So number 2 here, guys, is range trading. Super popular when the market's a little bit more quiet. So trend trading, you see in bull markets, bear markets, often you get it with stocks that are doing well, chugging along. Range trading means that nothing much is happening. There's not really anything going on. The market is staying in a range. Sometimes it can stay in a range for, a couple of months, sometimes even a couple of years. It's bouncing off the upper channel of the range and lower part of the range. And it's constantly doing this. Price is kind of moving back and forwards. It'd be nice if it was like a sine wave, but generally it's not. It's a little bit more jagged, but ultimately there's a ceiling on price and a floor on price. And as traders, what we're trying to do in simple terms is we're just trying to fade that range. It's like a mean reversion type trade. In other words, when it hits the upper part of the range, we're looking to sell or go short on our spread bet for a move back down into the range. And if it hits the bottom part of the range, we're looking to go long or buy our spread bet for a move back up into the range. The idea being is that range is going to contain price for the period of time for the foreseeable future. And that's our hypothesis and our thesis. So this example, market's been trading very much in this price range here. It comes along, tags the bottom of that price range again. We're going to go long, we're going to buy, spread bet right here, and the price goes back up and stays within that range and then maybe test the upper high of that range, and that's potentially somewhere we could take our profits. Okay, so number 3, a little bit more advanced this one, guys. Pair trading. So what is pair trading? So pair trading is really buying one instrument and selling the other and speculating on the difference between the two. Rather than speculating on one specific instrument, direction of one specific instrument, you're speculating on the direction, the relative strength of one to the other. So an example could be in the UK, 2 big supermarkets, Tesco, Sainsbury's, both in the same sector, both have stores in similar areas, both providing exactly the same thing, slightly different price, etc., but both in relatively similar. Now you might see that Tesco's is going a little bit stronger, rallying a little bit more than Sainsbury's. And so your pair trade could be, well, I actually think that's not fair, doesn't make any sense, and it seems to have any more market share. I think that it's just an anomaly, short-term anomaly, and ultimately price is going to come back together. Maybe Sainsbury's will increase in price and Tesco will decrease in price, and the ratio between them will then come back together. So what you would do is, if this was your Tesco's one here, let's put Tesco's, and this is your Sainsbury's here, you would sell Tesco's and you would buy Sainsbury's. So ultimately, if the supermarkets kind of all crashed, you'd be a little bit more, you'd be protected because you're long one and short the other. If they all rallied, then you'd be protected as well, because we wouldn't get any gains from it, should I say, because you've got short one and long the other. What you're looking for is for them to diverge or converge back together. So you can do that with many different types of instruments in the same sector. You can do it with indices, and it's a very popular thing with spread betting because spread betting's relatively low cost, and your margin requirements or your cost to trade and hold positions is a lot lower than it would be with shares, and you have the advantage of being able to trade in a down market, and it's very easy to do that with one account and very simple to execute that kind of thing. All right, so breakout trading, another popular way that spread bettors, or strategy for spread betting. Breakout is when the market comes up to a level and then forces its way through with a lot of momentum, a lot of velocity. So breakout traders will look for these levels, and generally in a trend, it's better in a trend. Range, not so much. In a range, you generally want to see more mean reversion. But let's say you're more in a trend here, let's say in a downtrend in this example, the market's found a little bit of a floor, but we're still in a trend. So in a trending environment, we found a little bit of a floor. A spread betting strategy could be to sell or go short as the market starts to break through that level and go to new lows, in the anticipation that it will continue down even lower, and the momentum and the kind of explosive move will drive that further. Now, that could be a very quick short-term trade for you. You could take that over several hours or maybe a day, couple of days or something like that. Or it could be a longer-term trade as you take the breakout that turns then into a trend trade, because this was already a trend. This is another way of perhaps getting into a trend. Anyway, guys, loads more strategies on the channel. Go and check it out. Have a look through the video library. All sorts of stuff here for short-term traders, long-term traders, day traders. The lot is on there. There'll be something for you. If you like this kind of video, a thumbs up is much appreciated. Take care and keep your risk managed, whatever you're trading, whichever strategy you're using. Bye-bye.